Hey there, welcome to Contracts and Chaos. My name's Alyssa.
And I'm Brenna, and we're here to tell you that you are not alone in the mayhem of this real estate industry.
We're keeping it real and sharing our stories, strategies, and successes in today's real estate world.
So come join us every Tuesday while we talk contracts and chaos.
Okay, so today we are going to tackle the topic of VA loans because I know I don't know enough about them. I know lots of agents don't know enough about them. Clients think they're terrifying, and I'm like, I know enough to know they're not terrifying, but I think this is a topic that we definitely need to dive into, cover some, especially some misinformation that's out there. So we've invited Alyssa Guthrie to join us today. She is with Real Mortgage, which is our in-house lender, but she can sell mortgages to anyone. So if you're not an agent with Real, you can still reach out to her. We will make sure her contact information and social media are in the notes for the episode. I think you're Alyssa Guthrie Mortgage or something at pretty much
Um,
everywhere, right?
on all of or on all of the socials, you can find me at Your Mortgage Advocate Alyssa or Mortgage Advocate Alyssa.
Okay. And she also spells her name the right way.
The
Just so.
correct way. That's
So
the
yes,
only right way.
it's the only way to spell Alyssa. We spell it the same way. It's the correct way with a Y. Um and Alyssa is local to us in the Charlotte area, which is awesome. She came to one of my coffee and collabs. That's how we met. She saved the shit out of a deal for me. I don't know if we've talked about that one on here. Um,
Yeah.
where my clients found out 4 days before closing their previous lender was canceling their loan. And we had to salvage it, and Alyssa came through. So if you guys have a sticky situation or you're not sure, reach out to her. She's phenomenal. She saves the day. She does more than VA loans. I'll make that very clear too. But today we are going to talk about VA loans because her knowledge of them surpasses any other lender I've ever met. She knows the rules, she knows the regulations, the process like the back of her hand. Um, she also has a really cute dog. She has a husky, and she loves rugby and Taylor Swift. So, Alyssa, welcome to Contracts and Chaos.
Welcome to the podcast.
Yes, we're thankful that you're here today. And before we get started, can you give us a quick little bio? What's your background? How'd you get into mortgages? Roxanne, stop moving the computer.
So I'm Alyssa. I've been doing mortgages since COVID, and ultimately I used to. Sorry. So I've been doing mortgages since just in COVID, and I basically was selling beer and wine before then.
I didn't
And
know
I
that.
have a background as a children's and youth director. I have a degree in theology, and I have always had a passion for just helping people and connecting people with what they want and understanding their needs. And that has always been an element of my career, even in beer and wine. I love to go out to a brewery, understand what people like, and then give them a beer recommendation. And I'm pretty spot on. But I transitioned into like, I need to pay some bills, and mortgage became this ever ending during COVID. I got to work from home, learn something that was hugely, hugely confusing to most people and absolutely loved it. And it changes every single day. And I constantly get my ADHD learning brain scratched with mortgage because guidelines, new products, and just a new puzzle to solve every day. It's so much fun. Um, and so, yeah, and I've been doing it ever since. I've been in a couple different companies as I outpaced the growth potential at each company. And now I'm at One Real, and I'm really excited because the culture here surpasses anything I've been a part of so far.
That's awesome.
I think
That's
I
awesome.
think we've talked about it before, but the culture at Real in general surpasses anything I've ever experienced in our industry. So I'm glad to know that it's carried over into the mortgage side of it too. So the first question, what's the biggest myth? Like what's the biggest misconception that you hear realtors and sellers spew? Because those to me those are the two people who are always like, "Oh no, we can't do VA." Like, "Oh no." Like and I've had a client, I had a seller who was like, "I don't want they're going to tear my house apart." Well, guess what? I educated her on it and we closed with a VA loan, and there was no issue. So,
Mm-hmm.
what do you see as
I
the biggest misconception?
I'll
Definitely.
throw in one real quick. I had a seller too that was like, that he was so concerned about taking a VA offer because they have nothing to lose. Like they have no skin in the game because he's like, the VA is buying the house. And I'm like, no, I'm sure that every veteran wished that that's actually how that works. But these people, it's a mortgage. It's funded by a mortgage company. The VA is backing that loan, but they sure enough have a mortgage payment just like you and I. It's not just, oh, here, thank you for your service. Here's a house. They all wish that that was the case, but it's not. So that was the craziest one that I've heard, that they were just like, oh, the VA is just buying this house for them. They don't care if it works or not because they could just go get another one because the VA is going to pay for it. And I'm like, oh my God.
The skin in the game comment irks me so much. They literally, and I mean this in the actual definition, literally paid for that down payment with their blood, sweat, and tears. Blood, sweat, and tears. Every
Thank
single
you.
one. I don't care if they've seen active combat or not, blood, sweat, and tears.
Mm-hmm.
I couldn't survive boot camp. I couldn't. And I would say most of the people on the couch sitting there couldn't either. Full
Preach.
chest, hard mean. If I offended you, meant it. Um, but so like that is like that's one of them. I'll share another one, but like that they don't have a skin in the game. One, I don't think that the loan terms matter. How much down payment you're putting. I have veterans who could put 25% down, but for multiple different reasons, it makes sense not to. I also
Mm-hmm.
have people who go conventional who want to put 3 to 5% down because it makes more sense for them financially in their long-term plans, not that they aren't qualified. So it shouldn't be the seller's business. The skin in the game is the earnest money and due diligence in North Carolina. That's it. And if
Mm-hmm.
that meets your goals, that meets your goals as a seller, and that should be what you're concerned with. And honestly, I would say most people putting earnest money and due diligence of $1,000 using VA loan with nothing down actually have a lot more percentage wise skin in the game because I have a client who wasted $25,000 of due diligence because he didn't like the plumbing inspection. And it wasn't even anything that was red on the inspection, it was yellow. He didn't like it, canceled the contract, and said, if I don't get my due diligence back,
Wow.
$25,000.
He could have fixed the plumbing with that
He
money.
could have.
Right?
And that's,
He could
uh,
probably could have fixed it 5 times, depending on the house.
yeah, I think he ended up getting it back and he like knew the listing agent and like had some squirmishing things on it. But ultimately, like, if I had a due diligence of $25,000, I would be like, oh, that guy's got a lot of skin in the game. They're not backing out because I mean, like,
Mm-hmm.
I can't afford to lose 25,000, but most of my clients can't afford to pay 1,500. I wouldn't want to lose 1,500, right?
Right.
Like, and then you're talking about clients who legit, they went all in. They went all in if they lose that money. And that's what blows my mind is they're worried about the down payment, which like you don't see the down payment. I don't care about the down payment as a lender, right? Like I'm looking at that. That doesn't make someone more or less qualified to me. And it's not their business.
I had
But
someone say that about an FHA loan, um, which is very similar, not a zero down payment. But she said it's putting my sellers at risk because your client's not putting a down payment, or she's doing a small down payment. I said that's not putting you at risk. That's putting the bank at risk. They
Right.
have more skin in the game, more on the line if she defaults on the loan. That's nothing to do with whether or not she can close on this house. And I've encountered, like you said, similar with VA of like, well, they don't have a down payment. And I'll be honest, when
okay,
I first got into this industry, I was like, well, they don't have a down payment. They probably shouldn't even be buying a house. Like that's risky for the borrower. And people were like, stop. No. And so, yeah, I would say that and the inspection. The inspection is always the one that I hear about too. Like
Mm-hmm.
their
The
inspections are
appraisal. Yeah.
crazy. And I'm like, well,
Mm-hmm.
it's an appraisal, not an
Mm-hmm.
inspection. And I've been through 2 or 3 of them. The one the house was a disaster. We ended up walking away and getting everything back. The only thing the VA lender tagged was a cracked window. The other one, house was good. There were some things in the inspection, but the VA didn't look at that. It was the shed out back that was like 50 years old that had termite damage. And so
Mhm.
we had to replace like 2 boards. But I was like, this shed? And I like looked through that appraisal so closely. I was like, did they give the shed value? Because if they didn't give the shed value, then this is no, we're not doing that.
I'm
And they
so
did.
glad you know that. I am so glad because most agents don't know that that's a thing. Most loan officers don't know that that's a thing.
Mm-hmm.
I'm so glad we brought this up. Yes,
So
because that is something that's so. Show me the appraisal. Let me look at it. Let
Mm-hmm.
me read it. So yeah, explain that. Explain that to the
so
people about it not being on the appraisal.
everyone everyone wants to say that VA appraisals are hard. And I will say, so any government loan, USDA, FHA, and VA all have to meet HUD standards for safety, sanitation, and secure. Those are the three S's we need to be in cape. So basically, what the biggest things that we see are termite damage, being insecure, not sanitary, and not safe in a lot of things. And those are the concerns of exposed boards, right? So, or chipping paint, because it's not really lead paint. It is if it's prior to those dates. And it's not lead paint they're concerned about, but exposed boards lead to wood rot, which leads to structural integrity issues. And although those aren't as big of a concern on conventional, they are. And ultimately, what happens is really conventional appraisers are getting away with a lot more than they should be. That's what's happening, is that conventional appraisers are not held to the same standard on paper and they're allowed more leeway, which is because they're not certified in government appraisals or might not be. And so we see that discrepancy, but it's really not a case of they're not as strict, but they're not being held accountable to the strictness. But because the VA is guaranteeing 25% of the loan amount, that is why they are concerned with that long-term success, because that guarantee means that if the client doesn't pay, they break their dues, the VA is on the hook for some of that money. Not all of it, because they're not buying it. That's why eligibility and guarantee matters. With FHA and USDA, it's insured, which is slightly different, which is why there's mortgage insurance on FHA and USDA and not on VA. So more skin in the game. Veterans who are not, sorry, ADHD is going to answer this one first. With VA being a guaranteed product, they pay a VA funding fee that's non-refundable. You get you get your mortgage insurance refunded from FHA in part if you refinance or pay it off early. You don't with VA. And
Okay.
that's a huge difference. But if they're at least 10% service connected, or if they're applying for a service connected disability, there's a potential they could get refunded or waive it altogether before closing. And it's important
Mhm.
that lenders are asking that up front so that we have that information.
I dealt with
So,
that with one of mine. We got his funding fee. He was like, I'm not paying that because he's on full disability. And we
mhm.
Yeah.
had to fight with that lender, but we got it done. I forgot
And
about that one.
if you ever have a VA client from a seller side or buyer side, call the mortgage loan officer and ask, have you reviewed this veteran's certificate of eligibility? If the answer is anything but yes and it meets all guidelines, don't use that lender. It is blasphemy to me that big name, pain in my rear mortgage lender who targets veterans does not pull certificate of eligibilities at pre-approval. They do not pull it until they go under contract
Mhm.
at all.
I had one of those that it was they had never pulled, and I was a wee baby agent. This was 2019, and I had no idea. This was the first VA loan I'd ever done, and same thing. They had never pulled the certificate of eligibility till we were already under contract.
And sometimes they don't do it until they go to order the appraisal, which can be
Inspections and all
after
that stuff
inspections
too.
have been done. And at least after
Oh,
they've been paid
no.
for and scheduled, right?
Yeah.
And
Oh.
this, yeah, because there really are not required, like, so as a loan officer, you can tell me I can print you a pre-approval. There's no legal definition of a pre-approval. So there's not a legal definition between a pre-approval or a pre-qualification. Those are just semantics that we all talk about and bitch about. Sorry, We
Oh,
all
you're fine.
talk about amongst ourselves, and like we
Yeah.
have definitions for them, but the CFPB does not play a required definition for them. And I can print my letter and say I'm saying this person's qualified. It doesn't mean anything. You can wipe your butt with it. It's the same difference. And so for my pre-approvals for a veteran, I have pulled their certificate of eligibility. If I haven't pulled their certificate of eligibility, they're not pre-approved. And
Hmm.
here's why, is because for most veterans, they are active duty or served in one of the major branches. They weren't service, sorry, they weren't National Guard or anything like that. They didn't have a weird service situation. So it's not going to be an issue. It's going to be automatically there. But if you have an older veteran who records are issues, it might take longer to get it. And then if you have a reservist or National Guard member, they may not have enough service points, or if they were um, less than honorably discharged, there might be
They-
concerns with their discharge characterization that would prevent them from getting a certificate of eligibility for a VA home loan unless something was satisfied. However, you do not have to be honorably discharged to be VA eligible. I had a, I'm so ticked. As a personal friend, it was when I was a newer mortgage agent. So they didn't really know that I did it and it was in COVID. So it wasn't like we were talking all the time. And they got a home loan and he was less, I'm trying to remember his specific characterization, but it was like other than honorable. Other
Okay,
than
it wasn't
honorable.
dishonorable, but there is one in the
Yeah,
middle.
it was like other than honorable. And his loan officer said, "Oh, well, you can't have a VA loan." And they never tried to pull a certificate of eligibility, but we had to get his DD 214 and we had to get his something else uploaded to the VA system, and he had it. And like I closed them on a VA cash out a year less, like this year or last year technically. Um, and
Nice.
it was just like that loan officer never tried. And so they put them in a USDA loan, which was fine. And I think ultimately, like, because they don't have a service connected disability filed, that like it probably would have evened out. But it's like annoying because that loan officer didn't know enough to
Right.
fully, fully advocate for these people. And I think it's the statistic is astounding that most veterans who were eligible for the VA loan didn't use a VA loan. And it's hard to me to see that because usually the difference of the rates of the conventional loan, even if you're putting 20% down, it really does make more financial sense to use a VA loan over a conventional loan. The times I've
Hmm.
seen it not are when rates were stupid low. So even conventional was playing in the same rates as the government loans. And the veteran did not have a service connected disability, so they had to pay the funding fee. So that was the only trigger that they had a funding fee that got financed into their loan. And so it's like,
Yeah.
oh, then it makes sense. Because I always, if they're putting enough of a down payment, I always will compare with that because they need to know their full options. I can't make decisions for people. I can just educate and inform them on what they can do and walk them through the steps.
Let's talk about that a little bit too, as far as VA buyers going into, and we don't deal with it as much right now as we did in, 2020, 2021, but multiple offer situations, because I had recently a client that was like, well, if this is an issue, I can just go conventional. I'm like, hold up, because there is such a stigma in there, but are they really at a disadvantage, or is that just something that unfortunately agents are portraying, or home sellers are just assuming because of this stigma out there that VA is so complicated? And what's something that you've seen that we can actually offer our sellers for information and guidance on explaining to them the value of accepting a VA offer?
So on most homes, and what I'm calculating legs with, there's really a stronger offer on a VA home loan than a conventional for the appraisal process. And unless that you know the house has significant issues, like you know there's water damage, you know there's stuff, and then you're offering as is, and you're like even a conventional loan is probably going to have an inspection that's going to be a nightmare, right? So one clarity is The VA inspection, the VA doesn't have an inspection, and they're particular about this language because the inspection, you pay an inspector to certify that things are working, right? That is a technical definition, and that's something you should never skip. The VA encourages veterans to have an inspection separate. The VA appraisal process is a lot more limited. They're not making sure that the water is running in their dishwasher, right? They're not there to do functionality. There's just the appraisal, which is very bare bones, and they're not like looking into functionality. They're looking into sanitation, safety, and security, like foundational integrity. When they're looking into those, they may call things out. And if they call those things out to be subject to, we have a few different options. So in the VA appraisal, the number one thing is the process, Tidewater. If you're curious as a veteran, if you should work with a potential professional, whether a lender or agent, I would ask them how familiar they are with the Tidewater process. And this is something that a lot of agents haven't had to deal with in the last few years. So it may be something that you really need your lender to educate them on, which is okay. I've educated clients um, and their lender or their realtors about the Tidewater process because that's really my neck of the woods, but it's a thing where we have to come in together as teams. So Tidewater is what happens when the appraiser starts to get low. So how an appraisal works, from my understanding, is that an appraiser does the research portion and then they do the inspection portion, which I know I just said it's not an inspection, but they call it that and that. But they
Right.
go and they physically go out to the property and they go look and touch things, right? And they take their pictures. So the most appraisers have that two-part process and they do them separately, right? They're not doing it all in once because they have to schedule. So they may do their research part first and they may do their inspection part first. It just is personal preference and really their schedule. So the inspection process is going to tell us more about, okay, what is the physical requirements of it. And then the research is coming at that value and they're looking at other comps. They're looking at other properties. And a comp is the most similar size and type of house that they can get. They want to get it as close to possible. The best case is like you're in a neighborhood that has the same builder, right? Those are the easiest comps. However, most of us don't live in those neighborhoods. So they're trying to find like properties and say, okay, here's where the value is based on the market. We are assuming that appraisers have a market expertise, that they know what things are selling for. A comp is a sold home. So what we find is it's actually a little delayed because they are only going after the things that have closed recently. So if you're under contract and the most recent sale was a month ago, that market may have shifted. You may be in a more or less competitive environment, meaning that price could adjust. It's just an opinion of value at that time. And because it's just an opinion, the VA process has it so nailed down the FHA and conventional appraisals are now looking to change their process to be more like the VA, but the VA has it down. So Tidewater is when they get in their research portion and they're like, I'm not getting this purchase contract value. It's, I don't know. And that's where we get to, as your team, your lender, and your realtor. And I always like to get the listing agent involved and have this conversation about, okay, it's not coming at value. We do not get more information than that. We don't know what comps they used. They refuse to tell us. They don't have to. They do not tell us what value they're getting at, but we get to go and then say, okay, we get to go cherry pick the comps that we use to get to the valuation, right? Because the listing agent should have looked at comps when consulting price. So it's possible the listing agent knows that this is overpriced, but it's a market where we don't know. So that's where it is. And that, you know, hopefully you're having conversations with your buyer's agent of, is this a reasonable price? Are we worried about comps? Hopefully we've had that conversation. Sometimes things move too fast. Then we collect the evidence of the comps. We get three. We get to submit three comps, the best, the most exact, and the ones that will contribute to the highest valuation. And then we say, here's the things that we use. And sometimes it's also clarifying, oh, did they know that the addition to the house is actually fully permitted and counts as a bedroom? We need to submit that information. If we have things like that that might have been left out, we love to submit that additional information, a list of updates, things like that to the appraiser before they finalize their appraisal. They will take that under advisement, they'll calculate their stuff, and then they will come back with an opinion of value. I've had Tidewater be successful. I've had Tidewater not be, but fortunately for the VA process, it does not end there. It doesn't end there. So let's say worst case, we submit Tidewater and it still comes back low. We're going to review it. I'm going to review the appraisal, personally go through, okay, nitpicking value, but I'm going to have that hard conversation with my buyer's agent and my buyer and say, do we think this house is actually worth that? Do we, the three of us? Because sometimes it's not. And that means if the client wants to back out due to a low appraisal, the client can say, you know what, this isn't, and I want my earnest money back. I'm not a lawyer. You'll have to ask someone else about the due diligence. I've heard people argue both ways, but from my understanding, you still don't get that part back. But I'm not a lawyer. Um, and so that way, because you are making sure that you at least believe the house is worth that value, depending on how much lower it comes back, that that could be $5,000 or $50,000. I've seen it both ways. Obviously, that's a very different conversation. And if you agree, as the buyer agrees that, yeah, I think it's worth more and I'm willing to pay that much more, the buyer has to initiate this process technically and say, and request the VA for a reconsideration of value. And the reason it has to be them is because they have that option. Now, how it actually works is we all talk, we agree, and I say, okay, I'm going to help you write a letter so that you know what to say. And I'm going to help them and then sign it and send it with our reconsideration of value. Individuals have egos because it may be that, oh crap, I missed that. I don't want to admit it. It can be that simple. And there can be other things at play. We know that appraisals in the past have been racist, sexist, all of the ist. And we would hope that we've done better as a society, but unfortunately, the average age of appraisers is older than all of us. And that that's a factor that we have to consider. Unfortunately, the VA has a review analysis in place that a head appraiser goes and reviews it, and it's up to them in the regional loan center, RLC, to make that final decision of yes. But the VA is the only loan program designed to say if we can give this veteran a loan, we want to. We want to. It is designed that way. I have been on the phone with the RLC saying, hey, these are these are things that we need to address, and this value is so close, and it is a competitive market, and there is a backup offer, and there is somebody willing to pay conventional and pay over asking, right? We need this to come at value so the veteran can get this home. Veterans can pay over the appraisal. How it works is the VA is allows them to finance based on 100% of the loan to value, which the value is the appraisal.
Mhm.
If it's $5,000 over and they want to, they can bring that 5,000. It just doesn't count towards like a down payment of their loan to value if they can bring it and prove it. And then last but certainly not least is the part where we all love is the property requirements. Chapter 12 of the handbook, which think of it as the VA Bible, it is that is all about the minimum property requirements. And this is actually very, very close to the minimum property requirements for conventional because basically conventional said, what you doing? And then wrote it down. And so all of those are in chapter 12. You can look at them, and those are what's going to get called out. For example, the lead paint, things like that, a cracked window. Let's say it's a cracked window, it's a dual pane, and it's only one pane that's cracked. That's a good example of where I would probably say, let's ask for an NPR waiver. And an NPR waiver, a minimum property requirement waiver, is where we ask the RLC, technically, the veteran has to ask, like the veteran has to be okay with this because it's their home and they have to be willing to live with it. They can say, hey, I'm actually planning on an upgrade and we're going to actually replace all the windows in the house after we move in. Let's waive this so we can move and not replace this one window now. That's something that the RLC will take under advisement and they may waive it. There's other things that can be waived. The things that I see that aren't are like handrails and then the paint. Handrail and
Mhm.
paint. Usually my understanding of why it is those are things that they're never going to actually do. if they're not forced to. And
That
You
makes
know
that's
sense.
how it is. You move into a new house, the last thing you're going to do is fix the exposed paint on the outside windowsill. I get it. I get
Right?
it.
but it can be paid for by the veteran, and the veteran can
Yes.
do the work. They don't care.
Hmm.
I've had agents go out, chip paint, $10 a bucket of kills. It doesn't have to be pretty. There's no
I've done it.
cosmetic
I've done
Mm-hmm.
it
requirements.
for a listing. It's like it's not that it doesn't have to be, you have to
Mhm.
have this really high dollar construction general come over and do it. Like I did it for a listing a couple of years ago when my sellers moved out of state and we had a shipping paint issue on the exterior. I went out, sanded it, painted it, and it was fine.
And
No big deal at
if
all.
Yep.
and
I
if
had a
af
buyer pay for it on my listing, the one with the shed. My seller was like, no. I said I
yeah.
was selling. She's like, I've done the other repairs inside, even though I was selling as is, because I didn't realize those things were going on in my house. And I felt
Mhm.
bad. She's like, but no, the
Well,
shed's like 50 years old. He can pay
and
to have somebody fix that.
and it can be something that you say, "Oh, I don't we're going to exclude it from value." That's another option is if it's an exterior building, if it can be excluded from value, it's not significant. Like, right, if it's an ADU and you're trying to get value of it being multi-unit, it's probably not going to work if you're trying to get the value. But you can also say, oh, like that's a good option for a waiver too, is like, hey, we're actually going to tear it down. We're just going to get rid of it as the buyer. Now, that's one option. And then there's something called an escrow holdback. And this, not every lender will allow this because, and it does depend on very specific things, right? If if it meets, you could probably the cap is going to be different for lenders. I would say like $1,000 to $5,000 is probably the max you're going to get from most lenders. And then of like little things that you're going to escrow hold back, you're going to hold back that funds from the sale of the home to be done after closing with the with those funds. That's something that can help if the reason the seller can't do it is that they're waiting on the money. And that way they can get it done after closing and it can be done correctly. And then you have options. It's the least likely option because it's harder to shift and not all lenders can allow it. And it's trickier because a lot of things aren't allowed for it, but it's always an option to do. It's not that big of a deal if it's peeling paint. Termite inspection is another one, like, right, if you have the evidence, you might have to have treatment. It can get costly in some areas, and I learned that the hard
Yeah.
way. Like,
Yeah, that's something we wanted to ask about too, like the non-allowable fees and things like that with VA. And I know that the VA doesn't necessarily want the buyer to pay for a termite inspection. So if you want to go into that information, and then I know there's some new rules about the compensation where if the seller isn't offering a buyer agency commission now either. So those are two big ones that I think we all need a little more information on.
yeah, absolutely. So the VA, the veteran can pay for the termite inspection. It's totally fine now. It used to not be. So in 2019, basically the entire VA handbook was rewritten. And the weird part of the timing of that is that was about June 2019 when that came out. And then the market was really hot and COVID happened and everybody was even really hot then and everybody was in multiple offer situations operating on pre-2019 conceived notions of the VA. So there wasn't a lot of experience. So, like, one
Mm-hmm.
thing, I don't care how much experience you have as far as time. If you say, oh, I've been doing VA loans for 20 years, cool. Actually, we've all only been doing them for about 4.5 right now because it's a completely different loan product.
Oh, I love that. We talk about that with real estate too. I've been in the business for 30 years. Okay, well, if you're doing the same thing that you did back in 1980, we got problems. It's everything's different now. It's changed 6 times since I started 5 years ago. So
Mhm.
if you're not in it, I love that. Thank
Yeah.
you for saying that.
Yeah. So, non allowable fees, chapter 8 of the VA handbook. Go search it. Control F is your friend. Control F. You can Google it. I'm also building like a chat GPT bot that answers questions a little bit better than Control F. Trying. Um, but Section 8, the big thing is that no excessive fees. The third party fees that are required. For the lender, it is an origination fee is 1% of the loan amount and it has to include other numbers. Virtually no lender is really charging. Well, some lenders are, but a lot of lenders aren't doing the full 1% because they're baking it into the rate so that they can get the full compensation, right? Because that's how it works. Um, but you want to make sure things are included in it. The bigger things is like processing underwriting. Like if you see like processing underwriter application fee and that's adding up to over 1%, you want to make sure they're following guidelines. The VA is working on a process to double check lenders because they haven't been following that and they haven't been getting caught. And a lot of, unfortunately, up until May of last year, August of last year, gosh, it's been a heck of a year. Um, Veterans weren't allowed to pay for any buyer compensation, and that goes for transaction fees and the actual compensation percentage for the agent. Now, because of the NAR rule where it became a little bit more risky, they released a temporary circular. Circulars are basically the VA's update and clarification. Think about these as like, so if the VA handbook is the Bible, the circulars are basically like the really important pastors writing clarifying and the sermons. Sorry, we're in the South. I don't care if you're religious, that's just like the best metaphor I've got from it. Is or like in the Catholic Church, they like the diet like they issue edicts and those are like that's actually a better because that's the church that actually does that. And
I
they're
was going to say it's like we have all these legal rules and the commission sets them, but then they also put out like monthly bulletins like, hey, we don't do this now, just so you know.
yeah. And it's like because the handbook you can only like you make the rule. Like the rule is don't do this and then we have to clarify that okay, well this doesn't count as that. And so with that NAR settlement, ultimately the reasoning behind not having veterans pay for buyer agents compensation was that it wasn't a hindrance because up until then it was very customary that the seller would offer full compensation. And basically it was to get rid of that transaction fee on the back end. That was really the design for it. Because they kind of viewed it as like it doesn't make veterans not able to get the help that they need because of how the industry had functioned. Now that the industry has shifted, the VA is like, well, we need some temporary guidance until this all settles out and comes into a final form and we get this better. And so that is coming where they have that circular, it's indefinite, so until it's rescinded, and it allows for them to pay for those compensations out of pocket. Now, on the VA, the rule for seller concessions, which is when the seller gives up money to pay for closing cost, other things, the VA has much more options of what it can pay for. It can also pay off debts. So if you have extra seller concessions and have a pesky credit card, you can pay that off.
Nice.
That's 4% cap. Now that 4% cap is true seller concessions. What doesn't count as seller concessions is regular buyer's closing costs, which are things like your title, your loan fees, and up to 2 points, which 2 discount points on your mortgage loan, which means they can buy down part of your rate. So it's more than 4%, but it's 4%. So it's real complicated, but it's not.
Well, and I think
If
that's one of those things where when as an agent you're crafting an offer, I'm calling you. If you're the lender on this, I'm saying, Alyssa, seller's not offering compensation, but I also need closing costs. I need you to help me work these numbers. Like if we're offering this, what am I putting in this line to cover our butt to not break the rules, but to make the numbers work for my client?
yeah.
Mm-hmm.
That's
And
not something I'm
so
going to try and mathematically do myself and be like, I got this. No, I'm calling the lender.
and they specifically in that circular, which I can link these for you guys so they're in the notes. In that circular, they also specifically said that the paying for the agent compensation from the seller does not count towards those seller concessions because that
Which
was
is
one of
huge.
how agents have to do that is different because North Carolina has different rules than South Carolina about
Mm-hmm.
how they can talk about it. That's not my rodeo. Nope. I nope.
Yeah, but
Um,
if you're working with a lender on any, not just VA, any kind of loan, and you can't call them and be like, "Hey, this is what I'm trying to do. Help me." And they're like if they're not willing to pick up a phone, like you need to pick another lender. You should
Yes.
be able to call your lender about anything. And I know you just mentioned, using their VA like for the first time, and that's another question we have on here because VA loans can be used more than once, but talk about that a little bit as far as if it can be used as a to purchase a second home, or if this is just like they're selling their original, they can use it again to buy their next primary, and how they know how much they can qualify for as far as their entitlement that's left.
Sweet. So one of my favorite, it's really easy math, but the VA loves to complicate things because they just love to do that. So basically everything comes back to that certificate of eligibility. If you're a veteran, you should ask your lender for a copy of it just so you have it and just so you know they pulled it. I usually add them to their shared drive anyways or email it to them so they have it once I pull it. But where everything's going to come on that. So if you've never used your VA loan, you have a specific funding fee. There's a little chart. It's 2.5% for your first use, 3.3 for subsequent use. Putting nothing down. If you're putting a down payment, it's lower. It's a little chart that's on the VA website. But if you have a 10% service connected disability or more, it's zero. Um, if you're concerned about it, let me know. But on your certificate of eligibility, if you have a current home, you can use it to buy multiple properties. You can have more than one VA loan at a time, and there's not a limit to the number of times you can use your VA loan, period. Here's where the limit comes in. First use, you do not have a minimum loan amount, period. You can buy a $2 million home if you find a lender to lend on it. A lot of lenders do have a maximum loan amount that they offer just because then it gets riskier. Entitlement can be restored by two things have to happen for entitlement to be restored. Transferring ownership, that's the deed, and mortgage paid off completely. Those two things. So if you sell the house, obviously it happens. If you pay off the mortgage but keep the house, then the entitlement's not automatically restored. You have to apply for a one-time restoration. That one time is one time for life. That means one time. That means you get to keep one house that you paid in full from the VA without transferring ownership. One. Use that strategically. There's a myth that's like not really a myth, but just kind of a misunderstanding is that you have to live in the home for at least a year before you buy with another VA loan. That's not a hard and fixed rule. And the reason is if you know service members, they can be ordered to the East Coast tomorrow and then in 3 months be ordered back to the West Coast. They don't know and they don't want to hold them back because things change. Our political climate changes, MOSs change, and it's really flexible. The intent is to live in for it for at least a year, and also things change. So it's very flexible. But house hacking is buy, live, rent, or buy again, rent. Like it is a really lucrative way for veterans to gain wealth, especially for those who have that service connected disability who are limited on their income streams because let's be real, the VA is not the best for our veterans, so what benefits they do have, they should maximize because y'all deserve way more than what we give you.
There's a creator on TikTok who is a fighter pilot, was, I think he just retired. And his whole thing is how he has used the VA loan and house hacking to buy a bunch of investment properties. So he's set for retirement. Like he
Yeah.
bought a duplex, lived in half, rented the other side, eventually did exactly what you just said, and just kept moving along, buying different properties.
So always, 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 if anything comes up of like this loan is like, oh, you can't get use a VA loan, you have to use this or that for that, or I can't get you approved for a VA loan, get a second opinion from somebody who specializes in VA. And if you can, go look at their data and see how many VA loans they actually closed, because um, someone, veteran loan company is the worst one about not knowing their actual guidelines and just the overlays. Because if you've been told that the minimum credit score for a VA loan is 620, that person is either an idiot or lied to you. And um, because that's an overlay, which is lenders, which means it's specific. Legally, the VA loan has no minimum credit score. Now, I've not seen the lowest I've closed was at 506, 508, something like that. I've not seen very many lenders offer options below 500, but really because there's a couple credit rules that matter. It's 0 lates on anything, credit card, anything in 12 months, and no major thing. And that's going to be the biggest credit rule that people have, that's going to keep their score below 500 and still have a score. If you don't have a score, there's a whole nother ballgame, and you can get a home with a VA loan with no credit score. You don't have to have a credit score.
Interesting.
Yikes.
Interesting.
That is interesting.
Well, I mean, think about it. How many kids go in the military at 18? They haven't had a credit card or gotten a car or any of those things. Like, they just haven't. And so
that's a
they
good
don't have
piece of information to
Yeah.
have for sure.
I like
That's awesome.
Yeah, that's good to know. So I'm going to wrap this up. If you could give realtors one golden nugget of advice for working with VA buyers, what would it be?
Don't assume anything. Don't assume that you know the rules. Don't assume that you know their situation.
Okay.
Yeah.
I feel like that's solid advice no matter
Super
what
solid.
kind of client you're working
Yeah.
with.
Yeah.
Yeah.
Yes.
That's good.
Well,
This has been super informative. I know I learned some new things along the way about VA loans, and they're such a unique niche thing. And I know that many lenders that you work with, they do all kinds of loans, right? You'll hear, oh, I do everything. But listen, there's times and places when doing everything but being good at one thing is completely different. So if you're looking for somebody who is obviously very well versed in taking care of our veterans, make sure you check out the show notes. We'll have all of Alyssa's contact information in there and link a couple of items that she'd mentioned for you guys. She is with One Real Mortgage, but like we said, it doesn't have to be real agents that work with them. She can service loans all over with anybody. So make sure you check those out. And thank you again, Alyssa, for hanging out with us.
Thanks for
And hopefully
having
we'll
me.
have you on again next time. Or not next time, but
But
again, we'll do
again,
another
yeah,
one. But
definitely.
this has been great. All right. We will talk to you guys next week. We just finished another episode of Contracts and Chaos, but believe me, the chaos does not stop here. So check out the show notes for our email address and where to follow us on socials, and we will see you next week.